Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Suyash Maheshwari here with me in the
Hi,
studio.
Shweta.
Suyash, good afternoon.
Good afternoon.
A lot of volatility movement in the markets today.
Yes, Shweta. So, but after opening, about 0.5% lower, markets did try to bounce back in the morning trade. But after at around 10 a.m. or 10:30 a.m. or so, we saw a sharp crash, which took Nifty even below the 19,700 mark. Now, at close, Nifty was down about 140 basis points and closed at around 19,670 sort of levels, whereas Sensex dropped about 550 points and closed below the 66,000 mark. Now today's fall is on the back of a pickup in the crude oil price, which the last time I checked were hovering around the $91 barrel mark. Also the bond yields have spiked up again. They were trading at around 4.84%, the 10-year bond yields, which is a 16-year high. Another factor that's probably weighing on the markets is the escalation in tensions in the Middle East, as we have seen that in the last over the last couple of days or so. Now, talking about the broader markets, Shweta, broader markets which were trading with moderate gains this morning also erased all those gains and ended deep in the red. Now, the Nifty Mid Cap 100 was down about 0.9% in today's trade, whereas the small cap index ended about 0.34% lower. We also saw a spike in volatility. India VIX jumped by about 2.8% in today's session and currently hovers. It's settled at around the 11 mark. Now, among sectors, Shweta, the banking and the IT pack were the biggest laggards today. The Nifty Bank Index ended about 1.2% lower, even settling below the 44,000 mark, which is actually its lowest close in the last 1 month or so. We have not seen these kinds of levels since September, like early September. Nifty Financial Services also ended 1.3% lower. PSU Bank, Shweta, ended 1.67% lower, whereas the private banking pack ended about 1.17% lower. Another sector that was under pressure today was the IT pack. The IT pack fell about 0.6% in today's trade. Now, if you see the fall in banking and IT stocks, Shweta, this is on the back of a strong retail numbers coming from the US. Now, what happens is when there are concerns about inflation, of course, back in US, when there is a strong data, economic data coming out from the US, it adds to that inflationary pressure. So, to kind of counter the inflationary pressure, the Federal Reserve has to keep the interest rates higher for longer, if not raise the interest rates over the next couple of policy meets. So that has created a risk of sentiment in the markets, and a lot of emerging markets as a result were trading lower today, and Indian markets also saw a sharp correction.
All right, so a fear of higher for longer and perhaps constant rate hike cycles in the next couple of months to come is hurting sentiments in various Asian indices as well as in India. Kranthi Bathini joining us on the show. Kranthi, thank you very much for taking time out. Let's quickly understand by what happened in the markets this morning. There was a flattish opening, a better to medium expectation of results that would pour in. But towards the end of the day, we are looking at a sharp rebound. What are you making of the volatility?
Yeah, Shweta, you're absolutely correct. It started with a flattish kind of opening. But as we progressed during the trading day, it was very sharp. The correction is very sharp. But if you have to envisage, Shweta, currently after the rally of last couple of trading session, a strong rally and rebound what we witnessed in the market. And yesterday market tried to go above the resistance zone of 19,850 range. But that's where the crucial thing taking in terms of the geopolitics or in terms of the increase in the crude oil prices or the global cues, whatever be the reason, okay, market could not able to sustain above that 19,850 range. That's where the strong resistance is coming for the market at this point of time. Of course, there is nothing to worry at this point of time. The long-term trend is in an uptrend only. It is a kind of global cues, more of that, and also markets also rebounded from a level of 19,200 range most recently. So we are in a consolidation phase right now at this point of time. That is the reason, that is a key factor for the markets to drift down right now. What
Okay.
we can see in this market is it's more like a range bound market at this point of time. Probably we can see the market at 19,500 to 19,700. This is the range we need to carefully watch at this point of time, Shweta.
All right, range bound 500, 19,500 to 19,700, breaching the 19,700 mark at this point in time. But, crucial results, as I said, have started pouring in. Let's quickly run through numbers for VIPRO. VIPRO came out with its quarterly earnings just about a couple of minutes ago, Suyash.
Yes, Shweta. So the first draft of the numbers that I can see, I mean, it looks like VIPRO has missed the street's expectations. Revenue figure came in at around 22,395 crore in the in Q2 FY24 versus expectations of about 22,760 crore. Now this is 1.6% lower than our estimates, and on a quarter-on-quarter basis, it's about a 2% decline. Now net profit, Shweta, declined by about 7.7% on a quarter-on-quarter basis. Also, it is lower than our expectations by about 2 to 3%. Net profit came in at 2,650 crores. Versus 2,870 crores in Q1 of FY24. Margin, which we were expecting at around, to improve by about 90 to 95 basis points on a quarter-on-quarter basis, also came in lower than what the expectations were. Margins expanded by about 10 basis points on a sequential basis and came in at 16.1% versus 16% in the previous quarter.
All right, that is, of course, as far as VIPRO Q2 results is concerned. Kranthi continues to be with us. Kranthi, what are you making of these numbers?
Yeah, Shweta, I have not got the time to look into the numbers
Right.
in a detailed way, but what I can sense is the pressure we can see from all the IT majors, the margin pressure we can see, and also the guidance is quite weak with respect to the all the IT companies, which are the bellwether IT companies are concerned in India. What we can sense at this point of time, Shweta, there is a order book visibility. The TCV value, the order book winning value is strong, but where the problem is the execution. The vendors, the companies are taking time to execute the orders at this point of time. That's where the pressure is coming on with respect to the revenue, and there is a spillover effect. And as this spillover effect has been creating on many factors. One thing is IT companies always try to keep the workforce on bench, or they used to go to the campuses in advance and they used to recruit the human resource in advance prior to their completion. But right now, the companies are not going to campuses at this point of time. In fact, what we witnessed in this quarter is the workforce came down among all the major IT companies are concerned. So it shows some kind of skittiness with respect to the businesses are concerned. Probably it might continue for another couple of quarters also, it can be possible. So we need to understand these numbers. But the other side, as Suyash in his introduction of the market today, is mentioned US economy, the numbers are coming one way strong. And in fact, in US economy, one of the key causes of concern is the inflation. What does it reflect? One way is a strong growth. The US economy is going strength to strength. But the cause of concern is when this growth will take a pause because of the measures taken by the Federal Reserve, and what kind of impact it's going to create on the company's individual earnings in the coming future. That's where there is a dichotomy with respect to the order winning and order execution is concerned. That is the key cause of worry for major IT companies at this point of time.
Now, Kranthi, we also have some guidance coming in from VIPRO. Now, the IT services company expects revenue to fall in the next quarter by about 1.5% to 3.5% in constant currency terms. In dollar terms, it will be in the range of about 2,617 to 2,672 million. Do you think this will be a major dampener for the stock in the upcoming trading session?
actually it can create some kind of pressure with respect to stock price is concerned in the coming session. And given the kind of selling pressure what we have witnessed today, it can create pressure on the company. But one thing is, if you see the stock price, it's already in a range bound, Suyash, from quite a long time. The stock has been hovering around the 400 level quite a long time. We can say it is forming a base over there. So there will be a some kind of impact on a negative side, but I don't think so. There will not be any great extent. There will be a pressure on the stock price is concerned, because the stock has been in this range. It got stuck up from quite a long time.
Now, Kranthi, to your point, I was just looking at the price charts. Wipro has actually underperformed all other, like all other three peer companies in terms of returns on a 1-month basis as well as 6-month basis. Even it has underperformed Nifty IT. So, do you expect the returns to be muted going forward? And I mean, if you take the entire IT basket, at least the top 4 companies, what would be your preferred bet?
Yeah, it's Wipro. We can consider this as a high beta when compared with the other bellwether companies are concerned. The preferred bets are at this point of time is it all depends upon the risk appetite of the individual investor. Okay, the less risk averse investors, they can first the priority is TCS and they can go to Infosys, and those who are the risk appetite high investors, okay, they can do HCL. And in this list, one can have high patience, and one can take the one if anyone have the high risk appetite, Wipro. But there is no hurry. There is no need to go and jump and buy these stocks immediately. One can buy in a staggered manner. What happens is these IT stocks have a typical tendency. If you expand the territory for more than 5-10 years, these stocks are outperform the other benchmark indices. That's the beauty of this IT index. They have a strong business model, strong cash flows, but right now they are in the earnings looks very murky at this point of time. So that's where the real pressure is coming with respect to the IT stocks are concerned. And when we interact with the mid cap have not started for the earnings. When we interact with the mid cap IT companies, they had a very dream rally despite of the underperformance of the large cap IT. It's a complete divergence between the mid and large cap IT companies because of the specific domain they operate, because of the geography they operate. Mid cap IT companies are quite optimistic when compared with the large cap IT companies at this point of time, Suyash.
Okay.
Now, the guidance also coming in, we have seen Infosys cutting down its guidance for the full year revenue guidance. We have seen HCL Tech cut its guidance. In fact, Wipro has also cut its Q3 guidance. So, in lieu of that, do you expect FY24 at least to be a difficult year for the IT companies? If so, when can we expect recovery from the IT pack?
Yeah, Suyash, you nailed it actually. Okay, yeah, the as per the if you understand the from the commentaries from the management, it seems to be next 2 quarters. That means the FY23, the financial year can be a challenging quarter for the majority of the IT companies. But one thing is the long-term horizon investors. Okay, it might be a 6 months underperformance, and market is always a forward-looking animal. It tried to discount the future growth, and it tried to give the underperformance also immediately. So the longer term investors, okay, who have the patience, they can selectively they can choose the stock selection
Right.
at this point of time,
Okay.
given the kind of strong
Right.
business models they have.
You also briefly mentioned, since we're talking about Wipro specifically, you mentioned the total contract value of Wipro also remains high. There are large deals that have not been executed just as yet. How confident are you about Wipro, given that Wipro results are in fact far, far away from expectations when compared to other peers? The other bellwether peers seem to have done much better.
And also, I mean, Wipro has not really landed any major deal in the quarter gone by. We saw TCS land deals, I mean, long-term deals for sure, but deals worth billions of dollars. Infosys also, HCL Tech as well. We did not hear any announcement from Wipro. So is
So
TCB
where are
going
you,
to be a concern?
and where are you placing, VIPRO?
Yeah, Wipro will be in the bottom list of the stock selection, but in fact, but right now it's not the preferred choice immediately. We will wait and watch for the further commentary from the management, how the things are going to pan out. In fact, we can witness the same thing with respect to the stock performance is concerned, Shweta. But what we can sense from all these commentaries from the managements, altogether all the large cap IT companies, the majority of the segment-wise income is concerned, the banking and financial services. That's the major vertical for majority of the companies of Indian bellwether IT companies are concerned. That's where the problem, okay, where the subsets like wealth management, investment banking, this is the high margin businesses. That's where the pressure the IT companies are witnessing. Some kind of solace is coming with respect to the healthcare and engineering. This is the segments which are doing well. In fact, healthcare is giving some kind of support, but banking and financial services, that's where the major deal wins are not coming at this point of time. And it seems to be the pressure can be continued for at least for a quarter. We need to see the fourth quarter. Traditionally, fourth quarter can be a strong quarter, but given the kind of management guidances we can see, there will be challenging times for the IT major companies are concerned going ahead, Shweta.
Right. All right, Kranthi, let's quickly move on from IT pack to banking space. IndusInd Bank has also come out with its Q2 numbers. Let's quickly take a look at the numbers on your screens at this point in time.
So Shweta, I think the numbers, at least on the profitability front, are actually ahead of the estimates. We were pegging IndusInd Bank's Q2 profit to grow by about 20% on a year-on-year basis. It has come about 22% higher at 2202 crore in the quarter gone by versus 1805 crore in the year-ago period. Net interest income, which we had expected to come in at around 20% higher on a year-on-year basis, came in at 18% higher. Net interest income stands at about 5,077 crores against the expectations of about 4,300 and against Q2 FY23's 4,302 crores. Okay. Now, net NPAs have declined by about 40 basis points from 0.61% in the year ago quarter to about 0.57% in this quarter. I mean, Kranthi, the results look, I mean, there is a beat on the profitability front, but net interest income has come below the street's expectations. Also, the street was factoring in a lower number in the first place, given that the higher cost of funds was expected to pull down that number. How are you reading the numbers, sir?
Numbers look decent, given the kind of, as you mentioned, the high cost of funds at this quarter, and the interest rates have been rising up, and bank has to compete with other corporate banks also. So numbers look decent at this point of time, Suyash. And any dip in names like IndusInd Bank, it's a good entry points for the investors at this point of time. We need to see when the NIMs can go up. The cost of funds is also one of the key thing. We need to wait and watch. Overall, it's a decent set of numbers. That's what I can say with respect to IndusInd Bank is concerned at this point of time.
But I mean, will you recommend buying the stock? Because over the last 6 months, the stock has done fairly well. It's up about 29%, whereas, you know, the peers such as HDFC Bank is actually down about 8%. ICICI Bank is down about 7.8%. So we have seen a good, performance from IndusInd Bank stock as well. Even I think a couple of weeks back, it hit a 52-week high. So will it be prudent to enter the stock at current levels?
Yeah, any dip names like IndusInd Bank, it's a very good entry level for the investors who are investing with a medium to long-term perspective. Definitely, it's a good entry level for the investors, even the fresh investors. Any dip in the stock can be a good opportunity to enter whenever there is a knee-jerk kind of reactions at this point of time. It's a good entry level for the investors. Suyash.
All right, staying on with the banking pack, PSU banks have been laggard in the past couple of sessions. What are you making, with what's happening as far as PSU banks is concerned, Kranthi?
Yeah, Shweta, they had a dream rally, we can say, and
So it's
they
all
are in a
profit
just
booking now?
yeah, and also the weakness in the market making them to book in the making the profits at this point of time. Uh, we need to wait and watch for the results. We can expect a decent set of numbers from all these PSU banks are concerned. In a medium to short term perspective, they looks compelling at this point of time. We can see some kind of still some steam is left with respect to PSU banking stocks are concerned at this point of time, Shweta.
Now, Kranti, not only in PSU banking stocks, we are also seeing correction in the PSU stocks. In fact, I was looking at Hudco today. The stock fell down about 11% when the government decided to offload its stake to meet that minimum public shareholding norm of about 25%. Now, there are about 16 PSUs in which government holding exceeds that 75% threshold. So would you recommend, given the kind of returns that we have seen and the rally we have seen from PSU banks, some of them which have turned multi-bagger, would you recommend investors to book some profits or now or completely exit the space at this point in time?
Yes, all these PSU stocks, majority of these stocks have been in a momentum zone. Okay, some stocks without any fundamentals also they have been going up. So for the investors, a serious investors, this is not the place to be in. It is mainly for the traders and the momentum investors who like the momentum. One need to have exercise strict stop losses when they're entering into these kind of counters. Okay, just to mention, as you mentioned, Hutco, the stock was a laggard, but as I have been telling we have been discussing on your show also, there is a two-digit factor is playing. Most of the stocks who are in this two-digit, just to mention MMTC, Hutco, all these stocks have been momentum in nature. If the trader have taken the position, better to book some profit from the table at this point of time. And if still they have the risk appetite, they can hold, because these are the momentum incomplete in nature. Okay, when the momentum stops, we don't know exactly. So better to be take some profit from the table in these names.
All right, while we're at it, let's also take a look at top gainers and losers.
Yes, Shweta. So in today's session, Cipla was the top gainer among the blue chips. Cipla gained about 3.5% in today's session, and in fact it has extended its rally to 2 days. Yesterday also it was up about 1% or so, and the volumes were also high compared to the 1 month average. The volumes about 44 to 45 lakh shares exchanged hands in today's session, whereas the 1 month average is of about 15%. Dr. Reddy's was another stock which was up about 2% or so. The share is also on a 3-day winning streak, and we have seen a good bit of run up coming in from Dr. Reddy's as well. Tata Motors, which Shweta was hovering near its all-time highs, although it corrected yesterday, once again picked up. The stock ended almost 2% higher. Now I was reading a report now. CLSA has raised the target price on the stock from about 773 to I think 803 rupees. I think that's why we are seeing some sort of a pickup in Tata Motors stock. Sun Pharma was another pharma stock which featured among the top gainers today. SBI Life also ended about 0.5% higher. Now among losers, Shweta, was Bajaj Finance. Bajaj Finance stock ended almost 3% lower. I mean, the company did come out with its Q2 results, so the market only got to react to the results today. The numbers were more or less in line with what the street was expecting, but I think the concerns raised by the management as far as the NIMS is concerned has been one of the reasons why we are seeing 3% sort of a correction in Bajaj Finance. Bajaj Finserv, which is the holding company of Bajaj Finance, also saw that rub-off effect coming from the results of Bajaj Finance, and it was also down about 1.9% in today's trade. Other losers were NTPC, which was down about 1.5%, HDFC Bank, which was also down about 1.44%, and Reliance Industries, which was seeing some sort of a movement in the last couple of days. It saw some profit booking in today's trade and it is down about 1.44%.
All right, those of course are top stocks that we're tracking here on News 9. Kranthi, Bathini, thank you very much, sir, for taking time out for joining us here on the show.